Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Zillow Group and what's interesting about Zillow Group, and I'm going to talk about the backdrop that the stock right now is in correction territory and what that actually means, and then we're going to talk about its valuation and how this compares to Open Door Technologies. So let's get right into here. So what's interesting is that in Zillow Group, we can see that the company is guiding for it to be very strongly up in Q3, 200% year over year, more than 200% year over year. And you obviously have to remember that in the same period a year ago, the company reported negative 16% revenue growth rates. So in that line, you know, it was always going to be a strong guidance for the next quarter. But importantly, we have this segment which is iBuying, which is growing really strongly. So what is iBuying? iBuying is essentially a person selling their real estate online. So you kind of put it online and you get an offer, and you don't need to get anyone to come around and view your property or anything like that. That Zillow Group just gives you an offer, and it's very, you know, it's seamless. You get a cash offer, and you know, you dictate when you want to exit the property. So it's quite attractive. And that segment is, you know, was down significantly. I think approximately 70% last year over year. So this year, not only is it growing, but it's growing at a very fast rate. So that segment, you know, within Zillow Homes is going to be up 10 times year over year. So that segment is growing so fast that even if Zillow Group's IMT segment, which is essentially its advertising segment, is only up slightly, you know, because the other segment is up growing so fast, the whole company as a whole is going to be up 205% year over year for Q3. Despite that, you can see here both Open Door Technologies and Zillow Group are down substantially from February time. So the whole space has just been dumped, and it's kind of irrational if you think about it, because there's no real reason. Yes, maybe the home price appreciation is kind of moderating slightly, but it's not really that it's a COVID trade. And I don't know why, you know, investors are kind of just saying, oh, you know, it's kind of like a lot of the stocks that did really well in 2020, investors are just kind of dumping it and not really thinking through. I mean, but anyway, that it is what it is. So I already kind of talked about this a bit. So Zillow's IMT segment is just reported last quarter, Q2, 46% EBITDA margin. So you're talking about a segment that is kind of, let's call it this crown jewel. This is a highly profitable segment, even though as we look out to the second half of the year, you know, this is obviously not really, investors are kind of like, not really interested in this company, because they're saying, okay, we did report 46% EBITDA margin, but it's coming up to approximately mid-30s for Q3 and Q4. So investors are kind of saying, okay, yeah, you know, that was the one thing that I was holding on the stock for, because it's very profitable, the segment, and now it's kind of reversing down and compressing the margin. So investors are kind of probably not that interested in it. Another thing that complicates the thesis overall is that Zillow's homes segment, this is the iBuying segment, is still kind of unprofitable. But as we dig through, I'm going to show you that, let me just get this up, it's actually progressing. You can see in the screen. So in the same period a year ago, it was negative 61 million, and right now it went to negative 29 million. So there's a progression here, and you can see here as well the same thing happening. So in the first 6 months of the year of 2020, that was substantially unprofitable, and then you see that in the first half of 21, it's moving in the right direction. And for 2020 and 2019, it was negative 240 million. So there is a strong progression here that we can see when it's coming up to negative 29 million. And, you know, I suspect that at some point in 2022, this will turn profitable. So that's an important thing that I wanted to highlight here. We can talk about the fact that it's quite interesting that Open Door Technologies, you know, was the up and coming, it was the leader in the space, sorry, not the up and coming, the leader in the space. And last quarter they just reported, actually, they've turned profitable on the EBITDA margin. So EBITDA margin for Open Door Technologies was approximately 2.2%. So here's a company that's growing very, very fast and they just turned profitable. So it's quite an interesting take. So just keep that on the back of your mind. So it just validates this whole idea that iBuying can be profitable. Because you remember, people had this idea, can iBuying be profitable because it's really capital intensive? Yes, Open Door Technologies just shows that yes, they can be profitable. What's more, Open Door Technologies said, we are growing our profitability and our growth rate so fast, we're actually pulling forward approximately 2 years worth of our financial plan. So in that in mind, yes, I want you to remember that when Zillow Group's home segment can absolutely be profitable and probably will reach there very, very soon. So I kind of done some calculations here. So remember, Zillow Group's IMT, the advertising business, is very, very profitable. So I've done some kind of calculations here. You can look in the article afterwards, you can pause this video, whatever. But I estimate that Zillow Group's EBITDA will reach approximately 700 million for 2021, okay? Now, if we say that they take their foot off the pedal in terms of the amount of investment that they've done in the IMT segment, next year, it's possible that the IMT segment will come at approximately 40% EBITDA margin, which is kind of like in line with what it's capable of doing. Now, if you take that number and you suspect that the home segment will come very close to positive, that will, I mean, I believe that a reasonable degree here we can get its EBITDA level to reach 900 million in 2022. So that's something to keep in mind, that you know the company is priced at approximately 24 billion markup. You know, you're not paying a very large EBIT, you're not paying a very large multiple to EBITDA. It's approximately 26 times. I mean, it's not crazy for something that obviously is growing. You know, we've already discussed that at length, and it's, you know, has a lot of staying power, and over time this business is only going to solidify. Yes, there are more competitors, but this, you know, it's a space that is prone to disruption. It's one of the few spaces left that haven't really, you know, we've got healthcare, a lot of technology companies have been focusing on productivity and communication and stuff like that. And this is one space that hasn't really shown a lot of disruption. And so I think that this is an opportunity that's going to be, you know, has a long runway ahead. The other thing I want to talk about is you can see here the progression. This is Open Door Technologies. You can see this here. So in 2018 it was negative 77% on the EBITDA margin. Then in 2019 you had negative 5%. And you can see here that both Zillow Group and Open Door Technologies, you know, they started off quite, you know, unprofitable, but they're both really kind of just putting their foot down, and they're really turning on their operating leverage. So I think this is quite attractive. So I don't believe that with this in mind, that Zillow Group is perhaps expensive when it's just priced at 2 times next year's sales. You know, I believe that in this event that Open Door Technologies is probably even better, because Open Door Technologies is priced at 1 times next year's sales. So with that in mind, these are some of the investments that I wanted to kind of highlight for you guys. And if you want to find out what kind of stocks I'm buying into, don't forget to check out my marketplace. It's called Deep Value Returns. I'll tell you the stocks I own and why, and you're welcome to do a totally free trial to see if it suits you. You can cancel anytime before 14 days and you're not going to be charged anything at all. And you're welcome to check out my reviews to see what other people have said about my platform. Okay, hope to see you soon. Bye-bye.